Good evening, everybody. This is Mike Pisani. It is August 8th, and we are going to have a webinar tonight on how to hedge, and we're going to go review the market. Thank you, everybody, for joining me tonight. We'll try to answer all your questions. If you'd like to get a hold of me, you can reach out to me at mike@alphashark.com or on Twitter. My Twitter handle is optionsmike. You guys can always hit me up there and get a hold of me. So I hope you guys are all ready to try to provide you with some new information tonight. Oops. What I've planned for tonight, let's go over this first. Our risk disclaimer: day trading, short-term trading, option trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment, and trading operations involve serious risk. You can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for loss of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin, and other capital requirements. Everyone watching this presentation adheres to all risk disclaimers from optionhacker.com, alphashark.com, and Mike Pisani. Nice, Gary. All right, so normally we do a little bit of learning, and tonight we're going to go over how to hedge. We do our sentiment market review, and usually we go over flow, but after today's action, guys, not sure what we necessarily want to be looking at in flow here at this point until we see what happens tomorrow. So we'll spend more time going over charts and going from there. So let's jump into this here. How to hedge. So when we think of hedging in the market, can you hear me, Joe? Everybody else can hear me just fine, right? Yes, Arthur, it's being recorded. Everybody else is good. So you take care, Arthur. Good luck to you. So hedging allows you really to stay in the game longer and protect against price action that moves your position. Thanks, Simon. It's Joe. It's all you, buddy. Um, a hedge, I always think of as hedging long positions, but a hedge could be a hedge against a short position too, right? You could be shorting a stock and want to hedge it with calls. For tonight, we're going to focus on really hedging long positions in the market, especially that type of portfolio. But you can use hedges in the other direction as well. So what is a hedge? Very simply, a hedge is an investment to reduce the risk of adverse price movement in an asset. Normally, a hedge consists of taking the offsetting position in a related security, such as options. Okay, so that's kind of, we're going to look at several different ways to do this today, but it's very simple, right? We just want to reduce our risk against movement in the opposite direction. So why should we hedge? First off, guys, risk happens fast. I mean, just take today out of nowhere, right? We were at all-time highs, and then we gave it all back and then some. All right, and really risk generally comes when we least expect it. In fact, the less volatile things get, the more likely and the more complacent people get, the more likely something is to happen. Historically, September and October are two of the seasonally worst months in the market. If you look at those months over the years, some of the worst events have always seems to happen in that time. The financial crisis, September 11th, go out there and just start picking things and looking through it. These all seem to happen during this time of the year. For whatever reason, everybody's back, bad things happen. So one of the reasons I'm doing this now, because this is the time where you should be, if you want to protect against that, you should be hedging now against that time of the year. Another really good reason is for tax purposes. You know, if you're trading in a cash account and you don't want to take the profits at that point, you can hedge to allow yourself to stay in your longs longer and protect against downside action. Thanks, Mark. So hedging for tax purposes is a great way to be able to stay in a trade. If you're in an IRA and you just for a retirement account, you don't have to pay taxes, probably don't care. You'll just get out of it and get out of the way. But you know, here it's easy to keep involved and stay in so you don't have to pay taxes on something. And guys, protection right now is cheap. Volatility has been hovering historic lows. Protection has never been this cheap. It's making it very easy to do something right now, to come in and to hedge your positions. Okay. Um, what tools can we use? I have three, and I really only use the first two. I'm not a futures trader, but options, they're one of the easiest ways to hedge a portfolio. whether it's puts on the ETFs or puts on your individual positions or covered calls. And we're going to go over all these. Very easy to go in there and to hedge a position using options on your account. If you're not an options trader or not comfortable using them, inverse ETFs can allow you to easily hedge your position, right? You can take a bearish ETF on the SPY to use as a hedge. The problem with these is they often have large capital requirements, so you have to have equal amounts of cash to use that on the hedge. And of course, you can come in and use future contracts. You can short a future contract similar to nature and options going out in time. I don't trade futures, guys, so I'm not the person to ask on that and how that works, but I know people who do it and use it all the time. So types of hedges, position hedges. We want to individually hedge each of your positions in your portfolio. So if you're managing 6 or 7 or 8 longs, you want to go in and hedge each one. So the easiest way to do it is you can go in and you can start buying some puts. Go out in time, buy some puts. You're going in there. Your risk is your premium paid, and you're hoping that you're really hoping it expires worthless, right? You buy some puts, hoping that you never have to use them, but you're going to take them. You could also sell calls, right? Sell some out of the money upside calls out in time as a hedge. So if the stock goes up, we'll go over that. You'll know what happens. But if the stock goes down, you keep the premium and you keep your stock. Or you can do both. You can do a collar, right? We can take as an equity and we can sell calls and buy puts, collar it, and have probably close to a 1-to-1 move for the downside protection on that if you're really worried. Instead of just position hedges, we could also just take a portfolio approach. And by that, we can use a single instrument to hedge multiple longs or hedge our entire portfolio. And we're going to go over some of those, whether it be the SPY, the VIX, or any of the ETFs or the indexes out there. Guys, with me so far? Pretty simple, right? Easy stuff. Nobody does it, though. Okay, inverse ETFs. So the beauty of inverse ETFs is they trade like a stock. So you can be short the market and not have to use margin. That's big for a lot of people. People don't want to be on margin. You don't want margin requirements. You don't have to deal with those issues. You don't have to pay the interest rates on it. You just don't want to deal with it. Inverse ETFs, they trade like a stock. You can get in and out of them quickly and easily, and they have no margin requirements. They also come in leveraged form. So here's the terminology, guys. 1 times is short. 2 times is ultra short, and 3 times is ultra pro. If you guys aren't familiar with these. Something else to be aware of, when they're leveraged, they're going to decay a little bit. They're not going to always move 2 times or 3 times. They also decay because what they're doing is they're using options and future contracts to achieve that leverage. Does that make sense? So on the SPY, the SPX, the SPY, SH is the short, SDS is the 2 times ultra short, and XPXU is the 3 times ultra pro. You can use any of these 3 as a hedge against long positions by taking some of this on. Obviously, if you're doing 3 times, you don't need to carry as much of it as if you were using the SPX, right? The SH. Make sense? Right there for you guys. You want to find out what they all are. There's a nice list on this guy's website. His name is Trader Mike. It's not me. TraderMike.net inverse-short-ETFs-bearish-ETF funds. Grab a screenshot of this. Go over there. You want to do it on the IWM. You want to do it on specific sectors. He lists a good amount of them there that you guys can go out there and use if you're not familiar with them. Or you can even use them in day trading. I use these sometimes to scalp the market depending on what I'm doing as well. All right, so inverse ETFs, easy peasy, right? Trades like a stock, you put it on, and you decide when you want to take it off. Yep, same thing, Mark, GDX, you got it, and other ones like that. Okay, nice little hedges. Let's go over how we're going to hedge a position with options, okay? We're going to take Apple today. Apple closed at roughly $160 a share. I'm going out to November option because I want to get through the September-October timeframe, right? Makes sense? I want the time. I want to cover myself through that period. So the November 150 puts are roughly $4.10 an option, right? See, I have them highlighted down there for you. You should be able to see that pretty easily down here. So I can go out and I can buy some of those, which are a little bit out of the money, but they have an okay delta at 0.29, and they're going to give me some decent downside protection. Also, I could just go out there right now and against my common, I could sell the November 165 calls for about $5.60 and take in that premium with the knowledge that I could get called away at some point. Or if I'm really nervous about the market for the next 2 months, I can do a combination. I can collar it. I can sell the 165 calls and buy the November 150 puts, and I can take in a credit of $1.50 and have nearly a 1-to-1 protection to the downside on Apple here, and still have upside protection through 165 plus the cost of my plus the $1.50. So basically, I get out at 166.50, and I'm still good. If it's under 166.50, I've made money on this trade. Does that make sense? Is everybody following this? Right? I'm buying my calls. I'm selling my calls. I'm buying puts. I'm taking in a credit. And if Apple is under 166.50 by expiration, I'm in. I'm good. I made more money than I would have made just by doing nothing. Are people familiar with this? Have you used cover calls? Right? Easiest way to go out there and protect a position. Just remember one contract, right? One contract is 100 shares. Chris, I don't have this trade. I'm telling you, a way of hedging today. I'm just using Apple as an example to show you how you can do this with any stock out there. Do a covered call or just sell puts or calls. So I'm telling you, if the stock closes anywhere under 166.50, you've done well with this trade. Well, you could make more than that. It really depends, Chris. So let's say the market dives tomorrow, right? Let's think of the market nosedives tomorrow and starts a correction. We haven't seen a correction now in how long? Since the election, right? So let's say we get just a 3 or 5% pullback, and let's say Apple comes down to $1.50 a share. At that point, we have decisions we can make. Probably those 165 calls have mostly premiumed out, and you can probably buy them back cheap for less than 50 cents. Yep, this is for a bearish position, exactly. Those puts have probably gone up. If it's quick, they've probably almost doubled in value. Let's say they're not quite doubled. So you can choose to take them all and still keep the stock. You could also just buy back the calls, and you have the right to sell the stock at $1.50, at $1.50 at that point, right? That's how options work. It's giving you the right to sell your common at $1.50. The dividend just gets factored into the puts and the stuff there. That just makes them move a little bit differently, Don. So the only time you sell your stock in the collar, Ramu, is when you decide that you want to take off the call position first, right? Have to take the calls off first. You have to buy them back. Make sense? And then you can sell them at any time at that point. All right. So let's just go over this. If I just buy the puts, I have the right to buy the stock at the strike price, or $150 a share, or I can just take the profits in the puts, right? I can just use those puts as take the profits, hold the stock, and when the stock comes back, I've done even better. If I just sell the calls, I have $5 in upside protection plus the cost of the calls, right? So at that point, I'm taking in, we said 560. So if I just sell the calls, anything under $170.60, I've done better than I would have by not doing anything, right? If it's under 165 at expiration, I keep that 560 premium, and I still keep my stock, right? If I'm just selling calls, doing a cover call. If I collar it, I'm going to have close to a 1-to-1 hedge. So this is, if you guys want to really hedge a single position, this is the best way to do it. These are your 3 best options out there, depending on how you feel about the markets and how concerned you are. And I'm not saying today is an indication it's extremely bearish. This webinar was not planned with today in mind. Today just kind of happened. Makes sense? This just kind of came along on the right day. This was planned to put this out there now because it's a good time to start looking at stuff like this. Okay, let's move on. Let's use hedging a portfolio with options. So hedging every position requires a lot of moving pieces and a lot of positions to manage, right? Especially if you're doing covered calls, you got to manage the call and the put on it, plus the equity itself, and keep track of everything going on. And if you have 5 or 7 or 8 positions and you're doing it for every one, you have a lot of work to do and to manage, right? Plus a lot more commissions cost. Let's be perfectly honest. You're going to be paying commissions for everything you're going in and out of there. You can hedge an entire portfolio with one position. You can use SPY puts or pick your favorite index. You like the Qs, you like the diamonds, you like the IWM. Pick whatever you want to look. What I would generally do is I usually would look, if I want to do that, which one of the indexes I think is more vulnerable to the bigger downside move, right? Or you can use the VIX, and I like VXX calls as my choice for playing spikes and volatility, right? So for using SPY puts, for hedge, you want decent deltas. So 240 strike in November, again, is about as low as I would go because that gives me a 0.33 delta. Make sense, guys? You don't want the delta to be so far that the only way you're going to make money on it or have this work is if it's Armageddon. All right, we don't want to play for Armageddon. Armageddon comes, and that's a whole different story. We want time, so we're going back to November. And you can see that the price of those 240s are roughly $3.52. So SPY is not the cheapest way to play to hedge. It's a little bit expensive, but it can also move. A 3% move in the SPY is going to be down around 234, 235, 236, somewhere in that area. You're going to get a nice quick move on that thing. So it'll move down if we can get it. We haven't had a 3% correction since the election. So just keep that in the back of your mind. We are well overdue. The size of the hedge should depend upon your portfolio. One contract per $10,000 of stock is a decent number, but depends upon the beta in your portfolio. So if you guys are in names like Amazon and Netflix and how about some cybersecurity stocks like FireEye or Twitter, expect to have to, NVIDIA, good one, right, Chris? There you go, thank you. You guys are going to get hit harder, so you need to go bigger or use the Qs, which is going to move more, right? Kind of makes sense? You got to wrap your head around this. If you're in consumer staples or maybe like companies like Sun Edison, which don't tend to move as much in sell-offs like this, you probably can get away with a little bit less, right? So you have to kind of look at the beta of your positions and figure out what kind of move you should expect here. We're not looking for one-to-one protection with a portfolio. We're really just looking to lessen the corrective action. And, so as we come down, we're still making money on this. And when we hit that point, we'll look to either take this off, sell it with a profit and let the stocks rebound, or make the decision at some point to sell the stocks and just see if this keeps running or roll it to more time, depending on what type of corrective activity we get into, which we'll worry about in future webinars at this point. Because today was not necessarily the start of anything other than just some corrective activity. This is where I'm currently in. JD, I like around 30, JD, on a hedge. That's generally where I look for delta on a hedge. Now, this is where I'm currently playing. And I've been hedged for a couple weeks now with VXX calls. So VXX calls, they're very inexpensive. So here is the November ones. I am in the November 13 calls. I'm in at $1.06. Okay, you can see now today they were closed at $1.34-ish, $1.3450, the mark, right? You can see it right here. They move very fast. So you can see today they're up about 25% on this small volatility spike we had today. And they are excellent protections against a black swan event, because with volatility so low, anything starts to happen, volatility is going to spike like we haven't seen in a long time. The one thing I will warn you is everybody's looking for a spike in volatility. 2 weeks ago when we had that little spike, these were up 40 something percent. So these things move very, 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 very fast. So if you're looking to get a cheap hedge on an overall position, I really like the VXX here as probably the best way to go. It's cheap, and these things move very fast and can move big. If the VIX really spikes up towards 16, these things will jump up to $3 to $4 within no time, within a day or two. Does that make sense? Look where we are here at 13. This moves very similar to the VIX. If you get a $4 spike in the VIX or a $5 spike in the VIX, 13 to 8, we're going to be up around this 365, $4 area very quick with the delta. The other thing about a hedge, the more you go down, the more delta you get, the faster it starts to work for you, right? When we get to this 1-to-1, we'll be rocking at that point if it keeps going. So that's why we start out of the money, because we're not looking to make money on a hedge. We're looking to protect. So we don't want to pay too much for it. Make sense? Because that's money we hope to lose. The idea of a hedge is we hope to lose that money. Right? So goal of a hedge is that it expires worthless. It's insurance, Chris, exactly. That's why when I was up 40% 2 weeks ago, I didn't take it, because I'm buying insurance through the next 2.5, 3 months. Doesn't mean I won't take it off if we get some type of corrective activity at that point, right? But doesn't mean I'm not looking to take it off until I see something like that, or we get through that period. It's easier to hedge when protection is cheap right now. Once the selling starts and this stuff starts to spike and implied volatility goes up, you guys are not going to want to hedge. You're going to be like, oh, it's too expensive. Not November 13 puts, Don. November 13 calls in the VXX. That's what I'm using to hedge. Right? Counter. Make sense? VXX is an instrument for the VIX. I'm playing for a rise in volatility, which will come with a fall in the markets. I'm looking for my best value, and this is where I thought it was. All right. Take most of your hedge off when you believe the corrective period is over. I would still leave a trailer in place. You guys have questions on this? Anything? No problem, Don. This is why we're here, and this is why we're taking our time going over this. This is a good time to put something on. Nico, you like a bull spread? You can do a bull spread. It doesn't give you the big upside protection. You're capped, right? So if you do a bull put spread, you're going to have a maximum amount of profits you can make. So again, it's an insurance hedge, right? So I can't. So if the market really starts to go, I can only let's say you make a I don't know. Let's say you do a $3 spread, right? A put spread, and your max you can make is, let's say, is $1.50. Let's say you get a 1-for-1. That's not really what you're looking for, is it? Because if the market really sells off, it's not going to pay. It's not going to cover what you want in it. That's why I don't go that way. So do I trade the ETF for the VIX? I do trade the VXX with calls, and I will occasionally grab UVXY common and just take that for a ride intraday. And sometimes I hold it overnight. Mark. If you have 20K in the market, Chris, I would look to have on a hedge of about, with options, 20K, you can get 10 of those VXX calls there for about $1,300. That would be more than enough. You could probably even do half of it and cover it fine. Again, depends upon your beta. I always play SPY, Todd, because there's an underlying security that I can take ownership of. I do not play the XPX. The SPY gives me the ability, if I want, to take ownership of something if I do something like that. KM, I am not good with put flies, so I'm going to defer that question on you. I am not very good with them. Some people are great with them. I just don't. So guys, I'm always going to be honest with you guys. I'm not. UVXI does cover the down market. Yes, UVXY is a leveraged position on the VXX. So if the VIX goes up, UVXY goes up. If the VIX goes down, UVXY goes down. But UVXY is leveraged. That's why UVXY is always reverse splitting, because it's constantly decaying, just like an option, Kate. So you don't want to sit in UVXY and hold it. You just want to play it when it's in play. Any other questions before we move on? I would just, take a look. Nothing cheap. Don't go really expensive. We're in a bull market, guys. There's no reason to go nuts with hedging here at this point. The market's not saying we should, but it's a good idea to have something just in case, right? Just a little bit of insurance out there. All right. So let's go over the sentiment stuff that we all go over. Should be VXX, Don. Is it something different? I don't have interactive brokers, Don. Unfortunately, I don't use them, so I can't tell you for sure. Wish I could. I use VXX. Try $ VXX maybe. Should be VXX. All right, sentiment. So we start off with the fear and greed index as always. 2 weeks ago we were 82. We've now dropped down as of tonight down to 61. We're still elevated here. This is not a problem. We're not in a bad area, guys. Sentiment here is bullish, but it's not extreme bullishness, right? Not a big deal. It's okay. ETF sentiment on StockTwits. The SPY is actually up the last couple of days, even with the sell-off today. But we're at 53%, way off our 70% highs we had a couple months ago. So not overly concerned. The Qs has been steadily rising. We're back at 65%. We're down in the 50s last week at one point. And the IWM is at 49%. They continue not to like that. So overall, sentiment here is not a huge problem. Choose 30 delta on what, Judith? On the VXX calls? Did you look where they were when I bought them? I've owned them for 3 weeks now, not today into the close. Okay, they were down around that area. I believe that 111 was at the money when I bought those, Judith. Does that make sense? That help you out there? No, these are from today, Kate. I put these in there today. Yep, everything's today. I update these every time before I do a webinar. The last hour before I do it, so I make sure I'm getting the latest things for you guys. I don't slack there for you. All right, the oscillators. So here's something that makes me think that unless we have a black swan type event, we're not going to see a massive sell-off. The NIMOT is already at negative 92. We're halfway to the point where we look for reversals, or extreme reversals are around negative 300, a third of the way there. So this is good. This is very good for us if we're not looking for a massive sell-off here. Again, barring some type of black swan event. And we are seeing stories coming out now that North Korea is saying they're going to preemptively strike Guam. I'm just going to try to ignore that and play the action. Not really anything we need to worry about here. The NAMOT is a little bit better, but -6. We started to get a nice reading last week and we could not hold it. But the NAMOT is already down. This one very rarely gets much below 200. That's the NASDAQ one. So we'll have to keep an eye on that. Mark, I love your commentary, man. Thank you. Talking war, Ramu, no. Doing something, yes. Makes sense? He can talk all he wants, but if he's not doing anything, it's okay. All right, so the oscillators are on the right side of where we'd want them to be here for some type of corrective activity, because if we're up around plus 200, we could be in real trouble. The VIX, guys, this is why I'm saying great time to buy protection, to hedge. Look how low it's been. We got down under 9 2 weeks ago. Yeah, comments did. The market did not like it, but we'll talk about the markets in a minute. Let's get back. The VIX here is cheap. Look at some of these spikes. Spikes up to this 16 area. Wouldn't take much for this to go up to this at this point. A little action like this. We could, honestly, we could use some type of corrective activity. We can use something to reset some of the setups here. And we've kind of been seeing it a little bit under the hoods. We've seen them beating up sectors. But the VIX remains extremely low. All right, getting very tight in the bands again. When it starts to get tight, usually we get some type of move. So we'll see what happens here now. All right, the Qs. Qs have been lagging the SPY since this Facebook down candle, right? Facebook earnings, we all got that big move, felt a lot like back here. And then today we got this vicious sell-off to the 8-day with a little bit of a bounce after this nice high move. Under the covers today, one of the things that had me concerned was while the markets were pumping along, Amazon, Netflix, Google, and Facebook were doing nothing. Facebook eventually started to go around lunchtime, but it was not going early in the day. Our traditional FANG names were not moving with the markets at that point. That was a little bit of a red flag to me today before everything started. We look at the SPX. SPX made a new all-time high today, right? New all-time high and reversed. And if you look at a 5-minute chart, guys, you will see we put a topping candle in and came straight off of it. And we came down relatively controlled but fast, more than we should have been coming down. This is before the Trump commentary. This is before any of that. We sold hard in the XPX quickly today, harder than we should have. You know, I was expecting that we'd start seeing some things up there. I trimmed my Apple up around the highs. I put stops in on my Facebook up around, you know, when we were up at the highs and stuff. But there was something really weird. And then when the Trump made his comments, that's when we sold. That's when we got that move down. That's when we got that flush into the close. But I'm going to tell you, there was something going on before that. The other thing that was there is breadth. Advanced decliners, for me and Toss, it's $ADD, was weak. We only had a plus 600 on the day. A day like today with the markets up that much, you would expect like 1,800 to 2,500. So advanced decliners was very, very stock specific. Option flow today, guys, very, very stock specific. Apple, if you guys follow me and you're in my private Twitter feed with my service, Apple and Facebook, they were all over that all day long yesterday. A little bit of Baidu, they were very, very specific names. Yeah, Don, I see it. I see it. We're just going to sit there and see what happens, because the one thing I do know about the futures market is until 3 o'clock in the morning, and even as we come to the last hour, it's meaningless these days. They play games until late, until the rest of the markets are open and running. So I try not to look too closely. All right, so we had some warning signals today. What does this mean today? We have a breakout failure. We have a reversal candle breakout failure. We did hold the 8-day into the close. We have a very tight range here, but this is not good. I would expect some weakness. We'll see. Maybe we get a quick move down to the 21-day reverse and then come back tomorrow. But right now, this was not a good candle. It was a day to take notice. You guys make sense? IWM gave an even bigger flash warning sign. This thing got up, finally started going again, and then just got destroyed all the way back under the 50-day. Again, you put these all together, it was a day to take notice. Doesn't mean the world's going to end, does not mean the stock we're going to sell off, just a day to take notice. All right, any questions? Give my service offer, and then we'll move on to your charts for the rest of the evening, because I'm sure you guys have a lot of charts you want to look at. All right, so the service offering, what do you guys get? So we do a private, exclusive, unusual option mentoring, and we do daily recaps. Every day, Monday through Friday, you'll get a 15 to 20-minute video that recaps the action in the markets of the day, updating my positions, what I traded, what I'm in, what I'm not, but more importantly, you're going to get all the option flow and what it looked like and what looks good and what we should be looking at going into tomorrow and to swing as we move forward. Every Thursday, 6 o'clock, we do a subscriber-only webinar or mentoring session where we go over the questions you have, positions you may be in, what I'm seeing in the markets more thoroughly, and it's a 30-minute plus in-depth dive and your time with me to go over any type of questions you want, trading options, questions you may have, whatever it may be. Every third Saturday of the month, we try to do a boot camp at noon for an hour to two where we pick a topic and do a deep dive into it. We've done technical analysis. We've looked at options trading. We've looked at how to trade different deltas and stuff. So every time we go into that, we look at something new to go into and spend some time working with you guys to help you trade better. And I am now, for those interested, I'm doing a private Twitter feed where I'm calling out the option flow and what I'm seeing in the markets real time. So if you sign up for this for now, you sign up for this now, you get included in that. I'll throw you into there. You just have to give me a message once you get the first video. So all this, you can get this by going to alphashark.com best coaching. We have a summer special offering. It's $49 for the first month, $99 every month thereafter. That's what it'll look like when you see it there. alphashark.com best coaching. A lot of great testimonials coming out of here. People are loving it. They're making money left and right off of it. The option flow, they say, is some of the best they see in the industry. Please give me a try. I'd love to have you on board. That's it, guys. That's my sales pitch. I'm not going to spend time trying to sell to you guys. I'm here to really try to help you guys out tonight. That's how I view these webinars. So, unless anybody has any questions on what we discussed so far, your charts for the rest of the night are until my voice goes. How's that sound? And I do have some stuff we can go over too, by the way. All right. So, David, you win. SLB first. Thank you, Kate. Love doing this for you guys. Love helping you guys out. Kate, Chris, I haven't gotten that far yet, but I will tell you this. If you sign up for it, you're grandfathered. If the price ever goes up, your price will never go up. So that's something we may offer in the near future. Okay. So, Slumberjay. So, guys, first off, energy remains completely out of play. No matter, can I start with that real quick, and then I'll come back to this really in 1 second. So XLE, which I've been watching, you guys see me post about it. We finally kind of broke this downtrend, and now we're falling back to it, and we relost the 50-day here. It looked like we were going to bounce, and we're not holding, despite oil holding up. Gregory, you want a link to the website? I'm going to send it to everybody. You should have it there in your comments. So energy continues to be a problem despite crude looking better, right? Crude is okay next to 50. Let me know if you got it. All right. So Schlumberger here, if I'm looking to get long, I'd see how it handles this area right here, this 65 area. Maybe a double bottom here. Does that make sense? If it holds there, I could try it. It's also extended off the moving averages here. RSI is getting nice and oversold on it. It's extended to the downside. I would actually start looking for a scalp to the long side here now at this point on SLB. You're welcome. Baba. So Baba has earnings next week, right? Next week, so we have a week and a half to play in it. First off, this trend line, which I've drawn for you guys, see it? Notice how we haven't violated it. For the most part, other than this quick dip, we've been holding the 8-day. We had a beautiful day yesterday, and then today was just an inside day at the top of the Bollinger Band. I would look to try Baba again off the 8-day if it gets to it. We'll take a look, MJ. Give me a sec on that one. If it gets to it, I would also look for try to break of 160 and run before earnings, as most of the good names have run into earnings, right? So I would watch that and try to buy weakness. It would be one of my go-to names if I don't think we're going to sell off anymore because it's been so strong. I like Baba. GS, I completely whiffed on this week and missed it, and I hope it's going to give me another shot back in here. So GS, first of all, I've been pointing out to you guys, it's been holding the 200-day, right? Even this quick dip below, it came right back up. It has reclaimed all the moving averages. So I did not want to chase. I missed it on Friday, and I didn't feel like chasing it yesterday. So by the way, so you guys know, on Friday they bought September 250 calls for 36 cents, and I was trying to fill, and next thing I know, they were 47 cents, and I said, screw it. God, do I wish I had chased it. But I didn't chase. And after yesterday, I definitely wasn't going to chase. So today it popped out of the Bollinger Band to pull back. If this market stays strong, let the 8-day catch up, and I think we're going to 240, 250 on GS. That's what I look for my first target. Netflix. You guys saw the after news hour on Netflix, right? You guys know it's getting hammered after hours on Disney pulling all their videos off of Netflix. Okay, so this candle is not right. It was down at 165 or something like that a little while ago. And let's go see if it's still at. All right, it's bounced back. It's at 172 now. It was down a lot lower earlier. Okay, so Netflix, this is your gap. You want it to hold. It's weak. It's under the 8-day. It tried to retake the 8-day and failed. I am not long it here at this point. It's not acting well. Maybe after this move down tomorrow, maybe that gives us something we can play with there, JD. NVIDIA, we're heading into earnings on Thursday. I do not generally do much with it. I know we had a powerful down move today. So here's my concerns with NVIDIA, guys. Thanks, Chris. My concerns with NVIDIA, quite frankly, are we've run $70 since last earnings. I just have to wonder, while I think this stock is going up long term, I think this stock's going a lot higher. Are we priced to perfection? We're up 70% in 3 months. That said, yesterday it went to a new all-time high, and we gave it back today, but held the 8-day. There may be a scalp trade of this ahead of earnings, something you watch. I'd want it to hold the 8-day, though. I would not want to be playing below there. If it hit the 8-day and it started to bounce, I would try it there. Halliburton's been another horrible stock of late. Like Schlumberger, maybe this area here. So we can maybe just a little above 40, somewhere in the 40 area. Watch for a reversal down there. It's kind of in nowhere land here. It's at the bottom of the Bollinger Band. It's a little extended. I think it's going to go lower. Deborah, it depends on what happens. So you're asking about defensive stocks. So a stock like BA, it's a great question. A stock like Boeing, Boeing could go higher or be less. Another one I would look at more for that would be NOC, Northrop Grumman, or General Dynamics. You notice these all held in well today, right? So yes, these are potential defensive plays. Although GD got hit, they must have had some news. So it's a great question. These are all defensive type plays. Yes, they should hold in better if we're doing military action. Celgene, Ramu, I wish this thing would go. I haven't been in it now for a little bit, probably since one of these candles in here where I got out green after a couple trades. Green. Yesterday it looked like it wanted to go, but there was no call buying and the volume was nothing special, so I didn't get involved. And today we opened up and pulled back to the 21-day. For whatever reason right now, they do not show a big interest in biotech. And I'm just being careful. There's no call buying in it, Remove. And until there's call buying in biotech, I'm staying away from it. One thing, guys, you'll know about me. You follow me in my Twitter feed and you get the nightly videos. August, especially when the markets are slow, I follow the momentum in option players. If they're not buying options in something, I do not buy technical setups. I'm much more careful, if that makes sense. Costco. By the way, there was some weekly call buying in Costco today, up around the 200-day. It tried to bounce. It got caught up in this. I sold up in here somewhere. Wish I'd held it longer, and I've been looking to get back involved. And honestly, yesterday I should have. I wasn't paying attention to it. You had a reversal candle, right? Hammer reversal here. If the market holds, I like Costco to try to go higher. There was buying in retail names today, a decent amount of it. So they might be looking for some type of bounce there. So Costco, I'd keep in my short list if the market doesn't dump. We did NVIDIA RDY. I'm not familiar with that one. Let's go take a look. All right. Ooh, ugly. So this is a very thinly traded stock, okay? So very tough with technicals. Whatever's gone on here, it's not good. You sec. Sorry, I hate to do all this to you guys. Eh. I would look maybe at 31 for support. It's definitely getting oversold. So, and it's out of the Bollinger Band. I wouldn't, you'd probably look for maybe some type of bounce trade here. It's a little extended off the downside, but it's done these type of moves before. So I'd be careful with it. Do not like the chart at all, unless you want to short it. TIM or TTM? TTM. TTM, real nice, simple. This was easy to read. So you have a nice wedge. See it? TTM, you got a beautiful wedge. Wedge for it to resolve, and you'll know which way to go or pick a direction. So you have a mid-level wedge here after this event. XOM, I'm on avoid the energy sector until something changes. No, XOM is not a scalp type bounce because it's not oversold. MJ, you see the difference? HAL and SLB were extended to the downside. This thing's right on the 8-day. The 8-day is right here, right above it. So this is not a reversal type. AET. Hang on, let me go back. I was in the weekly trade. Sorry about that. I have it in here. Sorry, I might have been wrong on that. Hang on, back to XOM. No, still on the 8-day. Not the same type of thing. All right, sorry about that. AET. I do not like that candle combination at all. That said, it held the 8-day through these sessions. It depends what your risk is here, guys, on this one. AET is for you, John. This candle combination worries me. I would try to wait until it cleared this 157 range again to get long it. That would show me some commitment, if that makes sense. Mark, I love having you in here, man. I love you coming in. Appreciate it. Twillo, I'm long today. Okay, Twillo had some action in it today. They were selling puts and buying calls on Twillo. All right, you have this big gap up off of earnings. It was good earnings. So right now, real quick, you notice how it stopped right here, right on this line right here. If it's going to be good, it might consolidate a bit. It'll hold this gap or most of it around this 32, let's call it 3250 area. And eventually it should try to push up into this 38 area if it's going to be good, Ramu. We did Celgene, J&J. J&J, we've had buyout rumors, right? Nordstrom, I got the right name? Yeah, no, Johnson & Johnson, sorry. J&J, Johnson & Johnson? Man, I'm really out of it today. It looks like it's really kind of just consolidating after a big move. You have a double top here at 137. It couldn't break through, so it pulled back both times it hit it. You have support around 131. Notice how when it always seems to come back towards it, even really more support really at this 128 area right here. It's below all the moving averages except for the 100-day and the 200-day. That's my only concern on it here. It closed weak. I would wait until it got back above before I tried it. There's been no call buying in it either that I've seen. DG, Dollar General. They have earnings coming, so be a little bit more careful. Um, but it's trying to rebuild here. It's got a long-term channel. You have, so let's just do this real quick because there's a lot of stuff to go over here. First of all, you have this big gap right here at 81. So you have resistance at 79 before it gets there. You have a double top, then you have this little area. So you have a lot of resistance. The good news is it's above all the moving averages. Bad news is the last time I did this is sold off. So I think you could try to trade this up to 79 and then leave a runner at that point. If it really wants to go to 81. My guess is it does not get into this gap without good earnings. Make sense? Micron. So Micron's seen some big call buying again this week. They had an event today. It did try to get going today. So he had a reversal candle on Friday. Nice day yesterday. Took the 8-day today and then hit the 100-day and pulled. So I'll be watching this one tomorrow, guys. It's on my radar. I just didn't want to trade it with the event today. Um, that's just me. I don't like to trade around binary events because I'm not paying attention to it and I don't know the news. So I'll watch this tomorrow and I'll play the price action on it if it's there for it. Looks like it's trying to repair, lots of call buying, October 27s, October 30s, lots of different stuff. I think if the market doesn't sell off before we hit we will get back to this all-time, this high here around 32. Chris, I don't know which one in 137 is. Sorry. Win. Do I have win in here? Sometimes I do, sometimes I don't. Here we go. All right, I have two charts on Win. So first off, Win. They started buying big time calls into here, and I told everybody they always tend to be early. Hit the 100-day and held, hit it a second time and held, and now you reverse nicely, and you're up into the 21-day where you got a doji today. Mark, a binary event is like earnings or data for a drug company. It's an event that is going to have an effect on the stock one way or the other, and you don't know what it's going to be. And to me, playing it's just you don't know. You're playing roulette, so I don't play it. Make sense? So when I like this thing to eventually get back up here, the market's got to be strong. It doesn't have to be strong. The market just doesn't have to sell off. This thing tends to move on its own numbers, especially McCoo numbers. So we'll have to see how that works. By the way, one of the reasons I still like Win. Here's your weekly chart. You can see how we've just gotten up in a breaking above this area. We came back below it, and now we're starting to get back above it here. So if we can hold this 130 area, 130-ish, I like this chart quite a bit. Apple. So I did trade Apple today. I made good money on Apple today. I tried to leave a runner, and I got stopped out of my runner today. Oh, well. Apple, we talked about this in the service a couple times. It tends to wait 3 or 4 sessions before it goes after earnings. We did it the same thing here. We did it back here. We went sideways for a bit. Back here, we went sideways for a few times. And here, you can see it kind of tends to go sideways a bit. So I've been watching it. I got long it yesterday. I played yesterday next week's 162.50 calls, sold those for a profit, and rolled out until the September 165 calls, I think. I have to go look now. I don't remember. Anyway, it looks good if the market holds. It held in better than most of the stocks. It's a little off the 8-day, but this thing could run, especially with news on that iPhone 8 comes out. So I like this one. This is one of my go-to names if the market doesn't sell off. Makes sense. Everything we're talking about tonight, guys, assumes the market doesn't sell, right? You guys are all with me on that? Please acknowledge that, somebody. Thank you. Thank you, thank you, thank you. And so AAOI, it was priced to perfection. They had good earnings. Guidance was okay. Pulled down. That said, I don't think it stays down here long. A lot of call buyers trapped up here now. See how it handles the 50-day in the gap. I would trade right now. I would try wait until it pulls back a little bit. 8 days going to come down to it, play catch up. Look for call buyers. If they want it, they're going to come screaming for this name again and see if we can get back into that gap. Tiva. This stock's a bad news magnet. I mean, it just is constantly bleeding down. That said, it is deeply oversold. RSI is at 11.71, way off the 8-day. 1, 2, 3, 4 down days in a row after that gap. I would look for some type of bounce here very, very soon. There has been big put buying, and now we're starting to see call buying coming into it. If I would look to try maybe playing September 19s or 20 calls if you see some type of reversal. What I would look for is to come down, trade below a low, and reverse back up and then get long. Does that make sense? Who was asking me about Tiva? Ramu. Oh, he left. Okay. So if you guys want to play Tiva, look for it to get below it, trade higher intraday, and then get long it. Cat, we had the CEO left, right? It's had a great move. They bought calls on it yesterday, weekly calls. It did not go yesterday. It tried to go today and reversed in this weakness. One of the names I would look to get involved in if it's going to be strong and the market's going to stay up. It looks good. It's holding the 8-day. Just caught up in the weakness that we had today. Uranium stock. Oh man, you really want to go there, huh? To me, it looks weak. It's lost all the moving averages except for the 50. And to me, it looks like the last 4 sessions, it's riding the 8-day down. I would actually look for it to test this 1365 area maybe in here, or the 50-day down in here. See how it came to the 50-day a couple times and couldn't get through it before it did? So it does use the 50-day as resistance. X gave a nice little bounce without a lot of call buying into it. So after earnings, which were great, should have gone, didn't, pull back, didn't even hit the 50-day. You have a 1, 2, 3, 4-day bounce before we got this doji today off the 100-day. There's been no real call buying coming into it, guys. You know I love to play the steel names, but Trump hasn't done anything with the tariffs at this point. He keeps bringing them up every once in a while, but he's not signing the order. So I'm being cautious with the steel names for now. And you guys know I love them. Ramu asked, do I look at weekly or daily charts? I look at both, guys. VRX earnings today were not bad. Gapped up but had no power. I was actually looking to see if this can go higher. By the way, if VRX earnings have been really good, this thing should have been over 18 and squeezing the hell out of the shorts. So at this point, I'll wait to see if we get some option flow, if it can hold the 50-day in this 15 area. Otherwise, I'm not interested in it, or maybe it's a cute short. How about BIDA for a put, Gary? BIDA. What do you mean BIDA for a put? You want to short it? I wouldn't short this. You had a big candle here. I think it was earnings, but I don't know. It gave you some weakness today, but it took it all back and closed strong. I'd be real careful anything other than a cute short here, Gary, unless for a day trade only. Make sense? I would not be looking to go. I would not be going to long-term puts here on this thing. It looks too strong right now, even though it's extended and overbought. Boeing, Don, BA, we kind of looked at that one. BA, this thing's been a monster. I mean, that earnings was incredible. It's overbought, doesn't care. It can get overbought, but it's got big time overbought. You can try to stay long it versus the 8-day. If it holds the 8-day, you're great. You have a gap here, right? A small one, then your earnings gap is all the way down at 222-ish. So I like it. I like to try to stay on this one. If it hits the 8-day and the market's not in complete utter disarray, I'd probably try to buy this back here. I would take a look at it. It's worth a shot with a stop a little bit underneath it, right? That's what we're looking here. We're looking to take shots. Gold. GLD. So I know gold was up. Gold is up 9 now after hours here. It's pumping as of 6 minutes ago. All right, two more after this, and then I'm done, guys. Okay, so we're gonna do gold, Snapchat, and AA because you asked for it, Al. It's just after 9. So gold here. If we're gonna have volatility and problems, expect gold to go. So gold's another way to hedge at this point. That said, gold has not really worked, and this you have a 123 area. Every time we get up here, it's a double top. So that's an area to be very careful on if we hit it. Snap has earnings Thursday. I do not like Snap as a company. So for the record, we it's a weak stock. It got a little bit of a bounce here on some people pounding the table on it. It has earnings on Thursday. I have no position. I don't know what to expect out of earnings on this thing. For me, it's a complete and utter crapshoot. All right, and the last one we're doing tonight is AA. AA had a bunch of call buying in it. Somebody was buying today, Al. They came in and they were hitting the 39s and the 40s and all different strikes hard and fast early this morning. That's why it was up so much. Somebody bought calls and was looking at the volume. They were making a position in it. I don't know how to use what, MJ. The webinar replay will be available once I get a chance to process it. I'll post it on my Facebook, on my Twitter feed, guys. Everybody, I really thank you all for coming in. I appreciate everybody joining me tonight. I hope you learned something. I hope you get useful information out of this. And yeah, Snapchat. You know how to use it, MJ. My daughter taught me. So there. My Twitter handle at options Mike. I'll send it to all of you. There you go. Thank you, guys. I appreciate you joining me. Have a wonderful night. Watch the price action tomorrow. Don't be in a rush. Figure things out. I'll post some stuff publicly. Everything gets posted in my private Twitter feed, so pay attention. If I think we're reversing, I'll give you guys a heads up there. Talk to you soon, guys. Thank you so much for joining me.